Thank you so much for joining us, Alistair Darling, in London for us now. In terms of what we're expecting from the budget, what is your biggest concern? A lot of the economists, but also the chief executives we've been speaking to, are focusing on this tax on fuel.
Well, look, firstly, I mean, your potted history of my career isn't quite right. I've never argued that you shouldn't start to get the deficit down now, and indeed that's precisely what we did before we left office. There is an argument here about how fast you do it. And I think the big thing that people will want to look at today is, what do the growth figures look like over the next 4 or 5 years? Have they changed since the Conservatives' first budget last June?
Now, all right, but Alistair Darling, you have argued that actually the budget should be cut less than what the current government has proposed.
And I'll tell you why. Because the key thing is to make sure that you reduce the deficit in such a way that you allow the private sector to take its place, to ensure that you've got growth. Because if you don't get growth, then that reduces your ability to pay down the deficit. And I think one of the things that people will look at today is, what do the growth figures show, and what impact does that lower growth level, which everyone's expecting, and the much higher levels of inflation we've seen here than people were expecting, what impact does that have on the reduction of the rate of borrowing?
So what would you urge the government today to do? Would it be just delaying the tax on fuel?
Well, I think there's no question that the politics demand that something is done about fuel, and I wouldn't implement the further rise that was due to come into place in April, because petrol prices, diesel prices here are going up. It's affecting most people. It's affecting businesses. So I'm quite sure they'll want to do something there. I'm quite sure they'll want to do something to increase the personal allowances. That's the amount of tax-free income that you get. Although you've got to bear in mind, with the indirect taxes going up, like VAT, that means that although they're giving some money back, they're also taking it away with the other hand. So I think you'll see a pretty mixed picture there.
And Alistair Darling, so far, actually, the government, the bond governments, or what investors are telling us in terms of bond yields, they're supporting the government spending cuts.
Well, there's no doubt that what the markets wanted to see was whatever government there was in Britain get borrowing down, and I don't disagree with that. The argument is, if you do it too fast and the private sector doesn't take its place, you then don't get the growth. You simply bump along the bottom. You see pretty stagnant growth over the next few years. That is the big risk that faces the UK and indeed other economies at the moment. That's my worry in Europe. Most of Europe is now pursuing a similar sort of policy. The risk is, if you don't get growth, you don't get your borrowing down, and of course, consequentially, there's other consequences. Well, for example, you get much higher unemployment than you'd otherwise have, which of course causes big political problems.
And is there a risk that actually we face a double-dip recession if interest rates go higher before the economy can take it?
Well, I think it really would be a blow to our economy if, in addition to taking all this money out, interest rates then went up. Because what is happening at the moment, and you saw it from the last quarter's growth figures, is I think we're suffering in this country from a fear factor, if you like. The present government has told people how awful things were. It has actually deliberately exaggerated the case in order to get political backing for what they're doing, and that has resulted in the last quarter's figures being pretty bad, even if you leave the bad weather out of it.
I just wanted to get more of your insight on, when do you expect the Bank of England to actually raise rates, and would you argue that the Bank of England shouldn't raise rates before the end of the year?
Well, I think the Bank of England, the majority of the Bank of England's Monetary Policy Committee have been absolutely right so far. There's still a lot of spare capacity in our economy. Obviously, these are things you consider month to month. But if you look at what's happening at the moment, and people will look at the growth figures the Chancellor announces today, if you look at the spare capacity in our economy and the lack of domestically generated inflation, if you like, then I think that the MPC is right to be cautious here, and I'd support them in that.
And one last question, really, on the price of oil. Do you expect this inflation to continue, and will the Middle East unrest push prices to record levels this year?
Well, I think there's no doubt oil prices are going to go up, certainly in the short and medium term, because of what's happening in the Middle East. There's a greater worry too. I mean, understandably, as a result of what's happened in Japan, people are looking again at nuclear. But were we to see a shift away from nuclear power, then that would put more pressure on long-term oil prices. So I think that is a big worry, and people are right to be concerned about it.
All right, Alistair Darling, thank you so much for joining us this morning.